Let's kick off with the trade discussion. Of course, we got, I suppose, some conflicting signals overnight. The news on Huawei perhaps signalling some pessimism in the markets, whereas the news on autos giving a lift to a number of markets and risk assets in yesterday's session. How are you positioned right now on sort of trade in terms of where you want to take risk and where you want to not take risk?
Well, you're absolutely right. There are a number of mixed messages in terms of the trade front as we sit here this morning. And in a sense, I think that's the problem that investors are trying to wrestle with, is to determine whether they should be becoming more pessimistic on the outlook for trade, or whether we are just experiencing some local difficulties and we're talking about, sort of headline risk, which ultimately isn't going to have a material impact in terms of the trade dynamics over the next 2, 3, 6, 12 months. And I think we would take the view that in the context of what we've seen in terms of the auto tariffs yesterday, that obviously has to be relatively unambiguously good news for those auto producers in Europe and Japan. I think in the context of China, we aren't necessarily taking the view that we think that this is going to turn into a material, aggressive trade war, which is going to have an amplification of those sort of recession risks through the course of the rest of this year. So we're cautiously optimistic still in terms of assets and asset values as we go into the second half of the year.
Jeremy, good morning to you. Good to see you again.
Good morning, Manus.
You would concur with some of the other houses that there's this magical level in the sand at 7 that will be defended by the PBOC, especially to prevent the kind of rerun of the devaluation they had in 2015.
Yes, absolutely. I think that is a very significant psychological level. I think for the Chinese authorities, if they were to allow that level to give way, then I think it would have a very negative sort of influential effect in terms of the presumption or perception in terms of the Chinese population of the momentum in their own domestic economy. So I think it would potentially lead to additional capital flight. So I think the authorities will be looking to make sure that that level isn't tested fairly vigorously. And I think if we do see a move in the second half of the year to try and see slightly better economic conditions domestically in China, and also I think from the US dollar side of the equation, I suspect that we will see a cheapening bias towards the US dollar as we see a deceleration in macro activity, debate about the Fed, ongoing political risk in the US, deceleration or deterioration on the fiscal side, then I think that 7 threshold should be out of reach, and I think the Chinese authorities' fears about the breach of that level I don't think will come to pass.